Today, a perfect scammer's cookbook. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and problem news with a distinctively Australian flavour. ASIC released recently a very significant warning concerning self-managed super funds and crypto investments. The release, which came out on the 17th of January, said that ASIC had noticed an increase in marketing recommending Australians switch from retail and industry superannuation funds to self-managed superannuation funds, or SMSFs, so that they can invest in, quote, a high return portfolio. Self-managed super fund trustees are being targeted to invest in crypto assets or cryptocurrencies. Now, on one hand, superannuation is an attractive target for scammers, and on the other, crypto assets are a high-risk and speculative investment. So ASIC is reminding superannuation fund members it is best practice to seek advice from a licensed financial advisor before agreeing to transfer superannuation out of a regulated fund into a self-managed super fund. And it's very important, they say, to consider the risks before setting up a self-managed super fund. In fact, setting up a self-managed super fund is one of the most significant decisions that you can make relating to your retirement savings. Before making the decision to set up a fund like that, it's important to seek advice from a licensed financial advisor. And it's important not to rely on social media ads or online contact from someone promoting an investment opportunity. It's very important, they say, to be wary of people cold calling, text messaging, or emailing you with a recommendation to transfer your super into a self-managed super fund or invest in crypto assets via your self-managed super fund. In fact, those Australians who decide to self-manage their super should consider the risks before using their self-managed super fund to invest in crypto assets. As the ultimate trustee of your self-managed super fund, you ultimately bear responsibility for the fund's decisions and for complying with the law, even if you rely on other people's advice, licensed or otherwise. ASIC recently issued warnings about an increase in scams involving crypto assets, and there's more information on their Money Smart website. It contains a lot of information on how to spot an investment scam, self-managed super funds and crypto assets or cryptocurrencies. The ATO website also contains information on superannuation scams. Now, if you decide to set up a self-managed super fund, you should seek professional advice to determine what investments to make. There are rules governing investments the self-managed super fund can make and taxation consequences for investments, including cryptocurrencies. Any investment must be permitted under the fund's trust deed and be in accordance with the fund's investment strategy. When developing and reviewing an investment strategy, you need to document how your fund's investments will meet your retirement goals, having regard to diversification, the risks of inadequate diversification, liquidity, and the ability of the fund to discharge its liabilities. You must also be able to demonstrate that the fund owns the assets. In fact, the ATO website contains information about those obligations. A licensed financial advisor can assist you with formulating an appropriate investment strategy. And it's also important that product issuers and market operators should also note ASIC's latest publications on meeting regulatory obligations relating to crypto assets, exchange-traded products, and other investment products. And in fact, ASIC has moved to shut down unlicensed financial businesses. For example, a One Multi-Service Proprietary Limited, which was located in Queensland in November, that Gold Coast-based company appeared to be engaging in unlawful activity, with ASIC alleging more than $2.4 million were transferred from a One Multi to buy crypto assets. ASIC obtained interim orders and injunctions from the Federal Court in Queensland against One Multi and its directors. The point here is that the director represented to investors that he can help them invest their superannuation into a self-managed super fund and then loan the money in their self-managed super fund to a one multi. ASIC alleged the directors told investors that they would receive annual investment returns of over 20%. Now, as I've said before, anyone promising high returns like that should be looked at very, very closely. It is highly unlikely to be accurate, legal, and appropriate. And ASIC also highlighted that there are people you can contact if you need information or help. Lifeline on 13 11 14, Beyond Blue on 1300 22 46 36, or indeed if you are experiencing problems with debt, then talk to the National Debt Helpline on 1800 007 007. But the point I want to make is that ASIC is highlighting two very important points. The first is that creating a self-managed super fund is a big deal. It might be appropriate, it might not, but you need to get appropriate advice. And if you are actually creating a self-managed super fund with the promise of being able to then invest in crypto assets, which are indeed high risk off their own bat, then essentially you are accumulating risk upon risk. And unfortunately, there are many scammers out there who are more than willing to grab your money, give you bad advice, and just run. So this is another example of caveat emptor, buyer beware. And if it is promising too much, it's too good to be true, and therefore it's important to be really cautious and careful. Unfortunately, I still hear of way too many people who lose their life savings simply because they were misled or otherwise encouraged to do things which, when you stand back and think about it, are dumb, but at the time, given everything that they are promised, may sound like the perfect solution. And the bottom line for me is this: there is no such thing as a perfect investment solution. There are risks attached to every single asset class, whether you're talking about stocks and shares, whether you're talking about crypto assets, or even gold and silver. And therefore, it's very important to first make sure that you do understand the risks, or indeed have your superannuation with an organisation that is trusted to make those decisions for you. And secondly, it's important to understand how things may change over time, and specifically that the latest scams will always try and ring people's hot buttons. And at the moment, the biggest hot button out there for investors is trying to get a better return. So ASIC's warning is very timely, very appropriate, and I want you to make sure that you take it seriously. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.